right. Good morning, Carrie Ann. Good morning, Garrick. Good morning, Matthew Mullier, Chris, Sheila, Roderick, Roger. Appreciate all of you guys joining. As you guys know, every Monday, 10 o'clock in the morning. So it's just about 1 minute till the 10 o'clock hits, and we get this show on the road. As always, it's hosted by the one and only Mr. Marcus Pagan. My name's Luis Moyano. We are both in the IFG team, and we're both members of the partnership program. If we have anybody here joining us that's not part of IFG or is not in a partnership and would like to find out more, reach out to Marcus, reach out to myself. We're more than happy to explain it and share the wealth, but we have what I would possibly say the best platform out there. This call is not for recruiting. This call is not meant to do any of those things. This call here is to help each and every single one of you guys get better at selling mortgage protection, which if you were on last week's call, you learned what is mortgage protection. And it's not really an item. It's not really a policy itself. It's a concept, but we guys can go back. We'll share that video later on. Let me go ahead and welcome my host here, the man himself, Marcus. How are you, brother?
I'm doing well, man. Hey, got rid of the rain, got some beautiful weather today, so I can't complain. I think it's a little bit of drizzling going on, but it looks to clear up and be a bright and beautiful 65 degrees, so I cannot complain whatsoever.
So what's up? And so let's ask here, everybody, to make it as interactive as possible. We got a good amount of people. There's about 16, 17 people watching right now. So welcome and ask questions, post on the chat. We'll go ahead and interact and get back with you guys. But we got a pretty cool topic today, and you're going to get two perspectives on what an in-home presentation looks like. So if you guys want to grab paper and pen, if you want to take some notes, I'm going to give you guys a little bit of an outline of how we do it, what we say, and what the final goal is. Marcus, before we go into it, anything you want to touch base on?
No, man, dude, this is my favorite part. Everyone talks about loving the process, and I think Tyler made a good post last night, actually, talking about dials, how the minimum expectation should be 300 dials a week. Just to get the blood pumping, get the weeks moving, and giving yourself the best opportunity available to have a successful week. And he couldn't be more spot on. So that's, like I said, we also talk about enjoying the process and basically getting those little things in place to have those powerful weeks like you're having, right? We were making $15,000, $16,000, $17,000 in a single week, not a month, not 2 or 3 months, a single week. It all begins on the phone. And in order to be successful, you must enjoy the process. So once you get through that phase, the next favorite thing is this part, the in-home. Being able to go sit down, meet new people, educate, help, and serve. It's probably my second favorite part of the whole entire process. I mean, getting paid's way back there. That's awesome. That's a byproduct of these first two steps, which is dialing and then the in-home presentation. So super excited to hear what you had to say, Luis. Go ahead and start with that, and then I'll chime in and give my side of the actual pitch of it.
Sure. And just because it's only 10:03 so far, we're going to back up a little bit, right? I'm going to ask you guys a couple of questions. And if you're watching right now, just answer yourself this. What is your goal on the amount of sits, not sets, but actually sits, of how many people you want to be able to sit in front of every single month, right? If you can, just write that down. Marcus, you do that same thing. Marcus is he's like 50-50 on the field now, 50-50 in the office, 50-50 with the family. He's just he does it so much, right, that he gets pulled in so many directions. But when he's on, and he's a beast. So let's talk, Marcus, as if you were 100% on the field and kind of jot down that number, right? And so you have that number written down, and literally do that. I can't see you guys doing it because there's no videos active, but do it, write it down, right? After that, the one below that, write down to get 100 sits, right? How many sets, how many appointments must be scheduled, right? Literally to be able to get that, right? And once you have that,
Hey, those
Let's
first
figure
number.
out.
You talking monthly? You talking weekly?
Monthly.
Monthly.
Big picture here for the whole month. Like how many appointments need to be set? And then just write it down. It's just become a little clear for you. How many leads do you have to buy to be able to get that? Right? And I'm going to just be transparent with you guys, because transparency is what allows us to make this work, right? Because if we're not transparent with you guys, now that I wrote this down and now that I'm sitting back, and I was just talking to Marcus, and Marcus and I are blessed. We've been in the business for a little while now, and our time is better used in the field and helping agents. So we've gotten to a level where we can afford to hire a dialer, but it's not recommended to hire a dialer until you're a master dialer. Not good at dialing, like a master dialer. Because anything happens to that dialer, you better be able to get back on that horse and ride it better than anybody else. Or if they're not performing as you'd like for them to, you got to help them get better, right? So if it's your first year in the business and you're thinking about hiring a dialer, I would tell you not to. Unless you're like truly performing and you're writing your 30, 40,000, make sure you're making your own phone calls. Okay. So the dialer concept, get it out of your head unless you're 100% there. But that shows me that although I buy a good amount of leads, I need to get more leads for myself. And I'm already investing around $7,000 a month in leads, right? So how is that possible? But $7,000 in leads is only getting me in the ballpark of 120 to 150 leads. So I got to be able to have more. Marcus, what did your numbers look like?
Mine, what I got going on, 80, 120, and 150.
80 sits, right? 120 sets.
So sit down with about 80% of the people you end up booking with.
And then how many leads did you say you have to buy to get that?
150.
150.
Now that would be a mix of MP and FE. Because unless there's a green pastures where there's 150 MP leads a month, show me where that county is, and I'm gonna go ahead and buy it. So
there. So out of 150, you're looking to set 100, 120.
120.
That's a high number.
Yeah. So right? I usually set between 83%. If I get them on the phone, I'm pretty dangerous. And then of those, about like you said, you're gonna have about 20% of people that aren't gonna be home. No matter if you did 5 tie downs, it doesn't matter. They're not gonna be there. But out of those 80 solid appointments, that'll be about 20 appointments a week.
That's amazing. 80% booking ratio is huge. I don't think I've been able to get, because just not everybody answers their phone, right? Not everybody is comfortable with you coming by or scheduling the appointment. Now, Marcus does some Zoom appointments. I don't like to do Zoom appointments, right? It's just, I'd rather sit down with them. If they don't want to sit down with me, I'm going to find somebody else that wants to sit down with me, because I know that the moment I get in front of them and I show them that I care about them and I'm here to help them protect their family, they're going to want to do business with me, right? And we're doing mortgage protection very competitive, where a lot of people will tell you somebody already came with that. So I'll show you guys how to get past that. But just now keep in mind and see what you're looking at. Like I'm saying that for me to have 120 set appointments, I need to have at least 200 leads, if not a little bit more. And right now I'm about 50 leads shy. So Carla, an appointment setter, executive assistant, awesome teammate. Sorry, let's get you more leads so we get more appointments. But out of that, right, I want to have 120 set appointments, that's 30 appointments set a week. And out of that, I want to be able to sit down with 100 people a month. If I can sit down, there's 25 people a week, right? And we all know our numbers. I know that my numbers are going to be anywhere between $100 to 120 per appointment per monthly premium. So if I can do 100 times, I don't know how many people, if out of 100 sits, I can sell 75, so it's 75% closing ratio. Not too bad. Out of $100 a month, let me clear that up. $100 a month times 75 people, that's $7,500 on monthly premium. At 12 months, that's $90,000 AP. I'm doing good, but I'm not doing that good. So I got to go ahead and follow my own system to be able to get to that. And that's what I want you guys to understand, that this right here is your own business. And when you're looking to do mortgage protection, when you're looking to do final expense, as long as you're running it as your own business, you're going to be able to get there if you just keep following that, right? Like literally stay with the steps that you need to get to that. So I need to sit down with 100 people a month. That's my goal. If I sit down with 100 people a month, my numbers are going to be getting that high. How many people you have to sit down with a month? It's going to be up to you guys. You know what? Start putting that down in the comments. Everyone on Facebook, everyone on Zoom, put down in the comments what your goal is of how many people you want to sit down with a month. That way, later on, whenever we come back and we have more conversations, we can get a little more accountable to what we're doing. 100 sits a month. You think that's crazy? Is that too many, Marcus?
MPFE Medicare? That's not far-fetched. I mean, it's 5 people a day on a 5-day week.
That's MP only right now.
It's a little bit crazy. I mean, you're probably talking Florida, 7-8 counties, easily.
Yeah, I'm trying to do it only in 3. So it's crazy, right? Maybe my numbers, and I'm a big believer in the 10x, right? All of you guys here at Grant Cardone, if you guys don't follow Ryan Lodi, please follow Ryan Lodi. He's amazing. No, that was monthly. Civic says weekly. Civic's another beast. This guy schedules more appointments than anyone I ever met.
He's all virtual. Hey, Civic, what's your take on it from the virtual standpoint?
Yeah.
You should be on Zoom.
Those numbers are going to blow us up. But follow Ryan Lodi, because, guys, he's going to keep giving you that motivation, right? So just on the mortgage protection side, if I can hit those numbers, it's going to be some real realness coming our way. But to the ones that are doing Medicare, wow, you can even do that many more people with that and with final expense. So with that being said, let's talk about what we actually do once we've set the appointment. Right now you're getting to the house. Now you're going to go in. So I've asked all of you guys to have some pen and paper down. I want you to take some notes and follow along with what the process is once you're getting to the home. And I think that I simplify things so much because for me, I rely a lot on my personality, on being able to sit with someone and make a connection, right? Because the moment I can make that connection, they know that I'm there for the right reasons. They know I want to be able to help them. And they can tell that I'm knowledgeable from the things that I'm just talking about. So my process is going to be completely different than Marcus's over here, because Marcus is very structured when it comes to following the path of where he wants to go. And you're going to notice that although mine's not as structured as Marcus's, we still hit on pretty much the same points as we go through it. All right, Marcus, before we go into what we actually do when we get to the house, let's add anything on from your side, from your perspective that you like to bring on.
No, man, that's spot on. I mean, it just shows me the beauty of this business. There's multiple ways to skin a cat. There's not a one size fits all. Now, if you're getting into the partnership side of it, we are creating a one size fits all approach in terms of a baseline skeleton. We're not going to make you switch out your whole entire presentation, but we're going to have at least something baseline to run with on all classes of the actual business, whether it's Medicare, MP, final expense, telesales. We have some baseline structure we are building out. So as me and Luis continue to work on that on the MP side of it, you are going to see some similarities in terms of what I do and what he does. And we're going to make that into one happy presentation. So super excited for that. But I think it's, from my standpoint, it's definitely imperative to have some type of baseline structure in terms of the questions that you're asking or the main points, especially from a growth standpoint. So what I found, I used to do the same way, shoot from the hip. I mastered my actual script. I created half of it, and I was able to run and gun with it. It was great. When I started to scale, not everyone was as good as me, obviously. So I think law of attraction means your best people would do about 20% of what you actually do, right? So in order to increase that number, increase the chances, I had to make something duplicatable to where it's a flow chart to where no matter who it is, they can look at it and they'll be on point, asking the right questions and getting them through the process where they can then call their senior underwriter, me. I can help them through the rest of the actual deal. So from a scalability standpoint, that was imperative. And like I said, that's what me and Luis have kind of been working towards on the collective side, just from when he would start scaling his actual MP shop, getting some of those baseline things in place and helping grow as well, to where he's not doing the same thing over and over and making that training process a lot more mundane for those newer agents. So it goes both ways, man. It's like I said, it's one of those things where I'm just like you. I can shoot from the hip if I absolutely have to, but then at the same time, I have to take a step back from a building standpoint and have a duplicatable process.
And at the same time, not to confuse things, every single appointment I do the same thing, right? I have a little binder that has a bunch of sheets in it that are pre-printed, I guess, right? And that's where I gather all the information. That's my fact-finding worksheet. Without that, I'm lost. Yeah, I know exactly what to ask, but the fact that they see me filling out a paper and asking questions and taking notes gets me to the spot that I need to get to so that I can make recommendations. So this is what happens exactly when I get to a house, right? I'll knock on the door, they'll come in, and I'll say, hey, George, what's going on? Luis, Moyano. If they already know exactly what I'm there for, that's a good sign, right? Oh, yeah, coming in, no problem, right? If not, they look at you weird and be like, we scheduled the appointment, or you spoke with Carla and you scheduled the appointment for mortgage protection. Oh, yeah, it usually clicks in, and we go ahead and sit down. The great thing about our CRM that we use Go High Level through the partnership. Everyone should be using it, and you should be able to record every single phone call you make that. I attach that link of the phone call to every appointment. So if I get there and they have no idea what I'm talking about, I'll say, hold on a second, and I'll play it right there and then be like, oh yeah, I forgot. Coming in, right? So it's a set appointment. It doesn't get more set than your actual voice recorder right there. So I get there. If they offer to sit down, the only way I'll ever sit down on a couch is if there's a table that I can write on and they don't have any other furniture, right? Like they don't have a table, they don't have a kitchen set, they don't have a counter. It's just the only way I'll ever sit down on a couch is if they have nothing else. But if not, you're heading ideally for the kitchen table. If the kitchen table doesn't work, then you go to the dining room table. But you want to say, hey, I got to take down and write some notes. Can we get to the table and sit down? Because you do business at a table, you don't do business at a couch. You hang out with your buddies, you have a beer on the couch, you watch TV, you're comfortable at a table. It's how you conduct business anywhere. So that's the first goal. So you sit down, talk them up a little bit. So how's it going? Doing well. All right. And then you just get right into it. I literally say, so John, you filled out this form. Most people that fill it out just want to make sure, God forbid, they pass away, the house can be paid for. What you have in mind, right? And they'll tell me, like literally, they tell you. I'm big on letting people sell themselves, because the moment they tell you that they have a need, then all you're doing is filling that need from them, right? But then right off the bat, if they tell you, I just wanted to get some numbers, you already know that you're just automatically kind of fighting a little opposition, right? You just want to get some numbers, not a problem. By the way, every single time that you get pushback, your response should be, that's not a problem. No, I got that. Here's how I can solve it. Always agree, acknowledge, and respond. Agree, acknowledge, and respond. Yeah, I completely understand. Your concern is mainly because of cost. So you want to know how much is this going to cost, right? Yeah. So perfect. We're going to go through the system. We're going to go through the process. We're going to find out exactly how much this costs for you. But you're always closing from the get-go, right? You'll say, oh, we'll find out exactly how much this costs. And so let me ask you this though, before we even get into it. If we find a company that fits your needs, to help you protect the house, get it paid off, and the cost is within a comfortable price range from you, the next step is to fill out the application, send it to the company, because without their approval, we have nothing other than speculation. Would you have any problem with sending the information over to the company today? Oh, I'm not doing that. Then neither am I. If you're not doing that, then what am I going to do this for? Right? And if they say, oh, no, that's how it works. Okay, I get it. It makes sense. Yeah, if it's affordable and I like it and I'm going to get what I want, then you go ahead and you proceed, right? So that's the buy-in from the get-go. I'll ask them and I'll say, tell me a little more about you. What is it you're looking to accomplish? Okay. You let them talk. You take some notes. Then you tell them, okay, let me tell you a little about me. Been doing this for a little while. I really just focus on protecting mortgages. Most of the people, they like to make sure that anything happens, then the house can be paid off. But sometimes it's not for everyone. Sometimes we just want to make sure there's a large enough sum coming in. They can refinance it. They can handle the mortgage payments for a long time. Everybody's different. So we're going to figure out what the best scenario is for you. Okay? Okay. And then you say, and the most important thing is that I make sure that this is within your budget. If we're out of your budget or making you feel uncomfortable, I don't want to do it. If I'm not doing right by you and we're putting a program that you can afford today, tomorrow, and 3 years from now, then it's not going to be worth it. Let's make sure that we find something in the right spot for you. Because at the end of the day, if you let it go down the line, then you're going to lose out the money. Your family is not going to get what you're getting this for, and nobody wins. Makes sense. Right off the bat, you're making them feel comfortable about costs. Like they can tell that you're not there to just, give them a $300-$400 monthly payment, and you still come across that. You still find the people that say, yeah, $300-$400 is totally within my range. If that's what's going to take for me to pay the house off, no problem. Everybody's different. Just know that you're going to tell them, let's find something within your budget. We make sure that we're always sitting with husband and wife too. Rarely do you ever do an appointment without each other. Learn your lesson. But once you get that, right, Marcus says we're putting together this fact-finding sheet that's going to be good for everybody. If anybody wants to, feel free to go on my website, empowerinsurance.com. Just the letter M, Power Insurance. Go to the training section, and at the top right, it says things to print. That's what I'm using right now. And once we have is the partnership one ready yet, Marcus?
Almost. We need one more section of graphs to build out. It's almost done.
Okay, because that's the one we're going to be going with standard across the board with everybody. But you just want to ask all the questions that are right on there. Tell me your name, right? Age. Tell me your actual birthday. Tell me your height and weight. As we're breaking this form down, you want to make sure that you ask what their sources of income are, right? Marcus, you know what? Give me access. Let me go ahead and pull this sheet up really quick.
You got it already.
Okay, cool. Powerinsurance.com. So let's go ahead and share screens. And this is so that everybody can see. That's my beautiful family there, guys. Time for me to update the pictures. Right on here, right? Go to agents. Under agents, we start training. And on the training website, right here in the top right, print out files. You go to your mortgage protection worksheet, and it opens it right up for you, right? We might or may not be able to edit this. Can you see that? Okay, Marcus?
It looks great.
So, just zoom in here. Why am I not zooming in?
You got full screen.
Okay. All right. So here, right? 3 objectives. You just work down this process. 3 objectives. 1, affordable. I already spoke about that. 2, comfortable. You got to know the company, tell them a little bit about that so they go ahead and they feel comfortable with the company and you. And then 3, we got to see if you qualify. Talked about you got to submit the application. Those are your 3 objectives. You accomplish all 3 objectives, they're going to be buying a policy. Okay? Date the policy up top. Find out what the mortgage amount is. Right? You owe $150,000. Great. Well, what's your house valued at? $250,000. That's awesome. That means that if you pass away, there's $100,000 of equity right there. Well, the equity is there no matter what. Find out what the term is like. I always also write down what their actual interest rate is. I don't know why I ask, but it doesn't really matter to us, but put it on there. I do ask if they refied or purchased, right? And if they refied, then they were obviously okay making the mortgage payment before, and now if they're saving some money, you want to know that. So you say, oh, did you refi? Great. Is it saving you some money? Awesome. Are you putting a little extra into your monthly payment every day? Right? Find out. Do you pay extra towards the mortgage on a monthly basis? Yes or no? And if so, you write it down. Or you also ask them, do you guys try to save money on a monthly basis? If so, how much do you try to save? You jot it down. Those are all little bullets that you're going to be adding to your ammo, right, to your gun, so that you can go ahead and bring them up later. That savings right there, you can work with that to be able to help them that much better. From there, We're going to go into names, right? Oh, you should already have their name written down, but birthday, height, weight. I do put a lot of emphasis into the income source. If they're still both working, how much do they bring home on a monthly basis individually? If they are retired, how does their breakdown, how does their income breakdown? How much do you get from Social Security? How much do you get from any pensions? Do you get any disability? Are you on disability? Right? What about on the other side? And this is so that you can understand what Social Security survivorship is like. If you don't know what Social Security survivorship looks like, we made a video on it not too long ago. You can find it on the Facebook group page. Just go to past trainings or past videos, or on my YouTube page. I feel like I'm just plugging myself in here, but that's not what I'm trying to. But right on there, guys, you can look it up and get to understanding a little bit better on how to do the Social Security survivorship. But find out exactly how much money they're making between the both of them. All right. So John here makes $3,000 a month. Sarah here makes $2,000 a month. Between the both of them, you got about $5,000 going out or coming in, and the mortgage is $1,500. Great. Let me find out a little bit more. Find out how much you making car payments. What's the electric like? What's the water like? Are your cell phone bills high? Cable, internet, insurance, entertainment. Just get everything, right? Are there any other major payments? Big credit cards, big loans? Do you have like I don't know, another house you have to pay for, or timeshare, or anything, any other major that takes away from the money that's coming in? And they're like, no. Okay. So then out of that, you can tell that, they have about 1,000 left over, and they tell you they try to save about 500 a month. So you could see, like, well, I could see how you have a little money left over to try to save $500 a month. There's money available. That's all you're looking to make sure that you find out, right? There's money available. So from there, usually before I go into medications and conditions, I kind of just go into this section down here. I find out, tell me, do you guys have life insurance, right? Oh, yeah, we have life insurance. Great. What is it like? Is it from work? Is it personal? Anything from work? Yeah, I have great insurance from work. I'll say, fantastic. That's awesome that you have that, but it's not yours, right? And we'll go into that, and we'll say that work insurance is great, but we never count it because we can't be promised to stay there forever. You never know what tomorrow's going to bring. Whatever it is, you tell them that work insurance we don't use. Private insurance is what counts. Do you have any private insurance? Yes or no. If they say no, ding, 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 automatically there's a need. If there's a yes, now you have to get clear understanding on exactly what they have for a couple of reasons. You tell them, like, one, we don't want to make anyone insurance poor. Two, we want to make sure that you have adequate coverage. And three, most of the time, I'm able to find better solutions than what the customers have previously in place. So let's just have a good understanding on what you have so I can give you the best recommendations. Okay, I have this, I have that. Then here you go. Do you have anything else that acts as life insurance that if you were to pass away, your family would get? 401k, IRA, stocks, bonds, mutual fund, CDs, savings, anything like that? Yes or no? This is how we find annuity money. All right. But at the same time, you get to have a big, big picture. Out of all that, you should already know that they need life insurance, or that they have so much money that maybe an annuity is the way that you want to go. And then you say, great. So I can tell, that there's definitely a need here. I always say this. I'm like, before I put my foot in my mouth and start offering you guys options on how to protect yourselves, let's get a better understanding on your health. And right off the bat, I say, either of you ever have a cancer or a stroke in the past? Yes, no, you write it down. What medications are you currently prescribed by a doctor? Any of you guys have diabetes, high blood pressure, cholesterol? Just tell me about it. And boom, you write it all down. Once you have that filled out, smoker, yes or no? Hospitalized in the last 2 years, yes or no? You know exactly, or you should know exactly what you're able to offer them and what's going to be best for them, right? And right from here, I like to make it simple. I'll say, hey, you owe 150 in the house. You're only 40 years old. We have plenty of options for you. What do you think would be more important for you? Or would it be more important to have the house completely paid off, or will it be more important for you to have some insurance that you're going to have at age 60, 70, 80? Let them answer you, because they just never know. So out of doing that, most of the times, guys, I like to offer one policy at least to be permanent. Whether it's 50 or 100K, that's either going to be a whole life or universal that's set to last them till age 100 or more, or I'm going to offer them a higher term, 20, 30 years. But everyone's different, and that's how simple it is, right? It honestly shouldn't take you more than 20, 30 minutes to really get, not 20 minutes to get the fact finds, and then to explain what options are going to be available. So when you tell them, I need 20 minutes to sit down with you and explain what's available, that's all you need. After that, then you put in the applications in, you're going right into that. Before we go into the sales part, Marcus, your assistant's pretty much the same, right?
Very, very similar. I mean, we're actually more alike than I thought. So, yeah.
So Susan's asking, do people push back on this information? What do you say when they ask, why do you need all of that? Great question, Susan. I understand how you feel, and what I found when people say this is that they're just not comfortable with you, right? So you just gotta take a step back, and I'll tell them, and I guess I do apologize because I probably should have said this a little earlier. As you're introducing yourself, you say, listen, I do mortgage protection. I help families, and everybody's different. I'm going to ask you some questions. I'm going to get a little bit of health information from you. I'm going to get a little bit of financial information from you. And this is going to help me have a clear picture on what your needs are for us to be able to help you protect the mortgage. Some people think it's as simple as, hey, come in, look at me, and tell me what it's going to cost me to just have the mortgage paid off. But as we made our video last week, we spoke about mortgage protection is no longer offered by banks. It's not that thing that's attached to it. So you got to let them know that this is independent companies offering it. And not every independent company accepts the same requirements as the other companies do. So for me to know once what your need is, I got to understand what your health is like to know which company is going to be the one that's going to say, yeah, I'm willing to work with Susan, or I'm willing to work with John. Does that make sense? And normally you would answer me there, but that's how you get to that, right? So once you're determining what their goals are, what their needs are, if they're young, you tell them, listen, a lot of the times I come across people that when they're 60, 70, they say to me, I wish I would have done this earlier, right? And at times, things happen in their life that their health changes. Today, you're 40 and healthy. I would recommend that we find something for you that's comfortable in price that you're going to be able to have forever. And by now, they're already looking for insurance. They want to make sure that they have something, right? So I use the Mutual of Omaha Index Universal Life a lot because it's designed to last anywhere between age 100 to 120. And we made a video explaining that too. And it's also in the back files. Or I use a 20 to a 30-year term to protect the majority of the mortgage. And it all comes down into what their options are by their health and what their options are by their budget. But I lay down a couple of options. I'll say this option here on the term side, this is you guys renting, right? This policy is not going to have any additional benefits. You're going to love it while you have it, but it's not going to love you back when you don't have it. It's just going to be nothing to it. You don't use it, you lose it. Make sense? Great. This one right here is a little more expensive for a little less coverage, but the policy is designed to stay with you for a long, long period of time, and the payments are never going to change on you. Both of them include living benefits, and we can make a whole other video on living benefits for you guys, right, on how to explain them. But both policies have living benefits that will help you guys have coverage if, God forbid, you do have a cancer, stroke, heart attack, you have to go to a nursing home, many other things. And then you start offering product. I usually don't like to offer any product until we get them to agree that there's a need, right? So with the need, how do you uncover the need? You'll say, okay, well, listen, just from what you guys are telling me, I can tell that if John passes away, Susan here is going to have a hard time being able to maintain anything. What are your plans? What would you do? Susan, would you move? Would you stay? Would you want to keep the house? Would you want to take the 100K of equity and downsize? What is it that you would like to do? And that's how you guys are able to find out what they are looking for, right? What is it exactly that they're looking for? Sell them to their needs, sell them to their wants. It makes it that much easier for you and start offering products. That's very basic, very like over the top, right? It's honestly the easiest thing to for me, and I say it's the easiest thing, but I was very not, yeah, I was nervous, I was scared for my first couple of appointments, and the more I did it, the better I got at it, the more I learned. And so when I say it's easy for me because I do it, 10, 15, 20 times a week. And it will get easy for you like that too if you keep reaching out to your uplines, if you keep getting more and more training and you keep learning more. So with that said, this is, guys, your opportunity to ask us any questions on what you'd like to know as you go into that. While you guys are generating some questions, Marcus, what I miss on there?
Man, you hit the nail on the head. Now I'm gonna go ahead and share my screen just to show my standpoint of it, which, like I said, crazy as it sounds, it's almost spot on. I said on my end, looks a little bit different. Let me move that out the way. I do have the process written out. So I'm very big on storytelling. And basically, to answer Susan's question, I let them know, just like Luis does on the front end, what's going to happen, what I'm going to ask, why I'm going to ask it. It's all catered to making a customizable recommendation for your situation. It's not a one-size-fits-all plan anymore. On the old school way, when the banks used to handle it, it was a one-size-fits-all plan, typically being a decreasing term or some type of accidental death policy. Now, with all the plethora of different products we're able to offer, different carriers, we're talking at least 16 companies with over 45 different products. It's not a one-size-fits-all plan, Mrs. Jones. So my job is to ask a handful of personal questions, not to be nosy, but to be able to help make a recommendation for your exact situation. And I've very rarely, maybe a couple times, gotten pushback. If I get any pushback, it's at the very beginning of my presentation where I'm not running through all these additional questions or anything, and then I'm getting the pushback at the very end. The whole idea of the way the presentation and the questions are built, you want the objections to come to you on the front end so you can address them. And most times their objections are not really objections. They're just concerns of items that they may have missed from what you were saying. So a lot of times you're able to go back into that beginning of that presentation and address them before anyone gets those objections thrown at them at the very end. Yes, this is on, I believe it's docs.iibrokersinc.com. There's a folder in there that has this file. Like, so this is going to be revamped again for a third time, be added to the actual handout for our fact finder. But same things. I mean, I'm really big on the why, get them to understand, why am I here? What triggered you to send this form back in? What information were you looking for? My favorite answer is, I just wanted numbers. It's a perfect question. I understand you want numbers. Great. What's concerning enough to make you want to have these numbers? Or what has happened recently? Someone passed away? Make sure you start thinking about this. Basically start picking at it easily, not overreaching or overstepping boundaries, but prodding the question enough to where you get them to give you a truthful answer. Or you take the lead and you turn it back around, you place it in front of them, and you start reading the lead out loud. It sounds silly, but sometimes people have to hear what they filled out. So in the event of your passing, I think what's the lead say? Company records indicate you have not yet taken advantage of the low-cost mortgage protection plan that is now available. State-approved plan designed to pay off your blank mortgage in the event of your passing, disability, or unforeseen, unexpected tragedy. While a plan like this, your family will still have to pay the mortgage balance. As simple as that, just getting them to read and hear that can make the world of difference in why you're actually there. Kind of get them back into that actual moment. But we do the same thing. I mean, you want to get name, age, date of birth, Working status, income is a big one because you want to understand what the changes are, what that shift looks like. Mortgage is for the mortgage payment. I do ask a savings question. Only question I ask additional is the marriage question. Even though I already assume that most people are married, it gets them to have an emotional trigger. So what this does, oh, are you guys married, Luis? Oh, you guys are awesome. How long have you two been married? You sit back and just listen. What this does, typically the husband, in terms of this, will sit back and think. If he's a good husband, he knows how long they've actually been married. Or the wife would stare at him and chuckle. How long, Luis, have we been married? And they have a small little moment. It happens every single time. I sit back and laugh because it's literally every single time. They'll either start telling the story of how they met, or they'll make a joke. Oh, we've been married only 5, but it feels like 50. Whatever they end up telling me, typically speaking, they're going to have more time than I do. I've been married for going on almost 6 years now. So I'm saying, oh, you guys have a lot more experience than I do. What's the secret? That's always my follow-up question. Whatever year they tell me, whether it's 5, 10, 15, 20, or 50, what's the secret? all the time. They always laugh. They'll tell you either communication, having their own space, their own TVs. I've heard everything. And I always follow up with, man, that sounds awesome. Most people tell me 3 things. Keep in mind, I've only been married for about 5 years now, but most people tell me one of 3 things. Mastering I love you, I'm sorry, and yes, dear. If you master those 3, you should be good. Does that sound fair? Husband always laughs because he always agrees. It's usually the yes, dear, I'm sorry, and the I love you would always win. The wife loves that as well. So it's an emotional tie. Like I said, I typically know the answer to this question before I even ask it, but it's an emotional piece to get them remembering when they first met, creating that moment before we get into what I would say is the pain question for me. But I'll ask current life insurance. We'll debunk that, whether we're going to use it or lose it. By use it, I'm talking spending it for college funds, spending it for income replacement, or if it's a work policy, talk about how they're going to lose it at a certain time if they don't buy out the policy from the group rate. Health questions, that's all the same. Big thing, always ask tobacco, always ask height and weight. Been burned on that too many times by not asking. Then health challenges. I say health challenges instead of health problems. Challenges doesn't have a negative vibe to it, where people start insinuating if they have a lot of these challenges, they can't get approved. And I'll list those down. But the biggest piece that I do, like I said, it's going to be the pain question. So Luis kind of touched on his pain question. But what I actually do is, okay, Bob, I'm going to kill you off real quick. I'll bring you right back, I promise. Now, I ignore Bob. I look directly at Mary. Mary, what's the plan for you if Bob passes away or doesn't make it home tomorrow? And give her a blank face and just listen. And it's going to get awkward. It's going to be some silence. Typically speaking, it might be a minute or 2 with no talking. That's totally fine. That's totally normal. Sit there, let her answer. Then if Bob tries to chime in, I'll say, hey, Bob, hold on. You're taking a small little dirt nap. You can't help Mary. Mary, what's the plan for you? Then if she's still stuck, I'll give her some options. Would you keep this house? Would you sell this house? Would you have to rent it out, downsize? What's the plan for you, Mary? The whole purpose is you want Bob to hear Mary's answer. A lot of time, Bob and Mary are not on the same page. Bob wants to keep the house forever because he brings in more money. He's able to. Mary, on the other hand, makes less money in many cases. And she would end up selling the house, or it's too much to deal with, bigger yard, stairs. The list goes on of reasons why she could possibly want to downsize and sell her house. But the whole purpose is you want Bob to hear what Mary will do with the house. So I'm not creating any ideas. I'm not telling her what she's going to do. It's she's telling Bob what she's going to do with the house if you weren't there any longer. So that's a huge power shift moment because it sets up the transition of why they need coverage, the original question, as well as tying in what you're able to offer to provide the solution to that problem. Like I said, I've never get any pushback on that actual question. It's usually some chuckling, and then sometimes you gotta get to a serious point of what the actual plan is. Because you said you want to be able to hear if there are any type of opposition or they butt heads on that option, you want to understand why, as well as many times it's going to resolve around income. You want to be able to circle back through the income and show them why they can't afford to live there without anything in place. Especially if there's income shift on the Social Security side, or pensions are going away, you name it, we've probably seen it. W-2 income. I mean, there's a lot of things that you have to bring up. In many cases, these are things that they've never even thought of. No one took the time to explain how this actually looks, in painting that picture of if one person doesn't make it home that evening, how that situation gets real very quick and how it actually looks. A lot of people will result back to their current coverages. We have to showcase, hey, that's great, but that's based off of Bob's $50,000 salary. $100,000 is only going to last you 2 years, Mary, unless you're penny pinching. You might be able to get 3 or 4, but it's realistic. That's 2 years of your current lifestyle. Can you afford to not have the mortgage covered? Then you start getting to a very direct question, right? So that's my big difference, except having a good, solid pain question and a couple questions that will get them into start drumming up that emotional sense. On the backside, I do the same thing Luis does. Map out the mortgage time frame. If there's any equity, figure out if they're paying anything additional towards the principal. If not, I always give away my free nugget of every appointment is 1 extra house payment a year, knocks off 7.5 to 10 years off that loan time frame. Simple math. Take their monthly house payment, interest, escrow, the whole 9 yards, divided by 12. So if it's a $1,200 a month payment, they're paying an extra $100 a month, will help knock off 7.5 to 10 years off that loan time frame. That's my free nugget to every person. I say that. Some people get it, some people don't. It all depends on their loan officer, if they had a good one previously or not, that explains that option. But it gets them to showcase one of two things: how to pay off their mortgage early, and also helps me set up why a 20-year or 25-year term option could make more sense than a 30-year. Because I'm going in there as the guy that's not trying to spend all their money. I want to be able to get them, like we said, something that's affordable, comfortable, but yet still accomplishes a goal at the very end of it. So having that takeaway of how they can save money by paying an extra $100, when I show them a 20 or 30-year option and I highlight the 20-year making more sense, and I show them the savings is able to go towards the house payment to pay it off sooner. Now those two ideas go hand in hand. Hey, this guy just showed me how to save 7 to 10 years on my mortgage, and then as well as cover that 20-year balance. And instead of me spending $200 or $300 a month, I can spend $150 and put an extra $100 a month towards the house. For $250, I'm actually winning. That makes sense. So that's my setup on that end, as well as my other option tends to be just like Luis. Return a premium or some type of IUL setup would be my money back option. And the way I differentiate too, same thing. This is the renting option. So my basic term options, my basic 10, 15, or try to avoid 10s, but 15, 20, and 30 options would be my renting. Because I'm going to assimilate renting at them some point to owning a house. And then my money back or IUL will be my ownership option. Just like how owning a house is a little bit more expensive, the ownership option does the same thing. As well as just like owning a home creates equity, this product has cash value that builds over time as well. So right there, by saying that little small phrase, it gets them to see this as a rental option. This is an ownership. A lot of times the people that own a house, they know how renting works and they hated it. They were giving away so much money. It gets them to like the idea of that money back or the ownership option. As well as, now Luis, do you do a triple option or alternate close? 3 different options?
Yeah, if not more. But depending on who they are and how it works out for them, right? I'm either gonna show them, if they want more permanent, I'll give them 3 different amounts, right, to find the right budget. If I'm doing a mixture, I'll write down 3 different amounts for 2 types of products. So here's your permanent, here's your term, and how we're gonna mix and match them to be able to give you the protection. I'll usually write them all down and then I'll highlight 2, right? One of them for permanent, one of them for term, and say if we do this, your payment between the both of them is going to be $150. After 20 years, when the term ends, 75 is going to drop off, and you're going to have only payment of 85 remaining for the rest of your life. That way, you can always have some insurance, and they usually like that. So I'll do more than 3.
Gotcha. No, same. So I mean, that's a great setup for the Advantage Plus product with Foresters because it's term and perm combo built into one product, and their whole life is participating. So as they get older, it actually increases and still gains cash value. Very very strong product. Um, but yeah, I mean, I do accept 20 and 30-year basic with a 30-year either ROP option or UL. And then I usually do the full amount. I go down about 30%. And then my go-to option is what I call a 50-50 plan. So say, for example, if this is 200,000, I'm going to show 200, 175, and then 100,000 base, or excuse me, 200, 150, and then 100,000 base, 100,000 accidental death. So any type of death by natural causes, I take that 100 grand and divide it out by their monthly house payment. Reason why we asked that question again, to showcase, hey, this 100,000 is going to last you, whether it's typically going to be 5, 6, or 7 years worth of house payments. If it's death by accident, it's going to pay out this base 100 plus an additional 100,000, enough to wipe out the whole entire mortgage. It's like having this top option, except for spending about 20 to 30 bucks less a month. So this is definitely it's a visual, but a lot of times, most of the folks, I try to not let them buy the Shamu policy, as I call it. I'll do some type of value proposition of why that doesn't make sense. And it typically goes in line with this image. As time goes on, this mortgage balance will keep going down. You're never going to owe 200 grand for 30 years.
Marcus, let's do that. This next week, actually illustrate what this will show that for them.
Oh yeah, for sure. No, that makes perfect
different
sense.
options.
But yeah, that's how that looks. And then like I said, we can go over the different sales concepts, whether they're young and healthy, older, so forth. We have a good sheet on that too that explains that stuff. But and then we'll get also into this bottom section of payment protection plan. Probably my favorite plan that I would definitely say, if you can master a payment protection plan, you will increase your sales by 20 to 30% of those people that otherwise don't qualify for term. You have to go to a whole life option, but still make it make sense in terms of the mortgage. So with that, we went 50 minutes, guys. Any questions? I'm sure there's probably a ton right now, but go ahead and drop those in the comments, whether it's on the stream or on our actual Zoom call. Go ahead and drop those or unmute yourself if you have any questions. Josh Civic, if you're still with us, anything you want to add, brother?
All quiet in the home front. I'll say it again, guys. It's your opportunity to pick Marcus's brain. This guy's a beast when it comes to all this. So being quiet doesn't do anything for you. It's always appreciated.
I have a question.
Yeah, Jose, what's up, man?
I really appreciate the call, man. I really, really do. My question is, where that document that Marcus just showed, where can I get a copy of that?
Good question. If you look at the chat that we have going on right now, he just posted a link for you.
Okay, great. Thank you very much.
That's it.
That's it for now.
I'm sharing that same file that Marcus. Oh,
I did it.
Literally beat me to it. Done deal. Awesome. Well, guys, thank you so much. I hope we're able to give you some quick insight on how to be able to just present mortgage protection for everybody. Find their need, find their why, let them explain it to you, let them sell themselves to you, and then don't give up before they give you. Don't give up the prices. Don't give up your aces in your pocket before they tell you that they want it, right? The policy should be sold by the time you're done with the introduction. Everything else is just semantics. By that time, you should already have them kind of working with you. You guys are a team and you're developing the right strategy for them to protect their family. Take that approach. You'll be very, very successful about this, and buy enough leads, make enough phone calls, set enough appointments, see enough people. You can't fail.
Thank you very much. This was great, guys. Really was good. Thank you so much.
You got it, Jose.
Hey, you're welcome, Jose.
What else you got, Marcus? That's it for you?
Hey, man, you hit the nail on the head again, man. Like I said, we worked that great tandem, so not much more to add. Just stay consistent with activity. That's going to be the number one thing. Like I said, my word for 2021 is being intentional. So everything you do it with a purpose. Do it with some intention to bring yourself forward or bring yourself up. So with that being said, guys, hope you guys enjoyed. We got some good stuff for next week, for sure. Like I said, be interactive as possible. Drop some comments, drop some likes, drop some questions. We'll be checking this throughout the week. Until then, guys, take care. Have an awesome week.
See you. Thanks.